expert this afternoon. Feroze Azeez of Anand Rathi Private Financial Services joins in. Hi Feroze, good afternoon. Our first query this afternoon comes in from Rajesh Joshi, who's written to us from Lucknow. So he's been investing 90,000 rupees per month. He's currently 38 years old and he wants to, or he's looking to invest for about 20 odd years, and he can extend that horizon. The only thing is he just started 2 months back, so it's pretty much a clean slate right now, right? So far the funds that he has selected are Mirae Asset Emerging Blue Chip, Kotak Standard Multi-Cap, Invesco India Contra Fund, SBI Small Cap and the Franklin India Feeder Fund, right? He wants to know, should he stop the SIP currently in the Invesco India Contra Fund and move it to the Mirae Asset Emerging Blue Chip? Should he split the small cap SIP, which is in the SBI small cap, along with the Axis small cap? And he has some more doubts, but let's start with these two.
See, I think the first question which he has, which is the fund, which is the Invesco India Contra Fund, I would definitely not be in it. In the Invesco category, there's another fund which is called the Invesco Growth Opportunities Fund, which I think is a 2,100 crore fund, a small fund, but has the agility which a mid-cap fund deserves. It has exhibited to buy businesses much before the market realizes they are good potential mid-cap stocks, and they've bought it really sooner than anybody in the institutional space has bought it. So that's a good way to identify whether mid-cap fund manager.
Which fund is this?
Invesco Contra, Invesco Growth Opportunities Fund. So he needs to move from the Contra Fund to the Growth Opportunities Fund on the first question.
Okay, should he split the small cap SIP from the SBI small cap also now to include Axis small cap?
See, I've been recommending to not put monies in small caps because after April 18, there's been very low institutional buying in the small cap space. So if you're sticking to mid caps, that will be a better strategy. Of course, from the high points of where small caps have been, and they've corrected so much, you might just feel and tempted and feel that there's value which has emerged. But I think unless institutional buying comes in that space, the price re-rating may not happen on the higher side. So I've stayed away from small caps. So I would ask him to consolidate into SBI focused equity, which is a little higher risk, but still will give you the higher return, but in the mid cap and the large cap space.
Okay, so in fact, this answers one of his questions, which is that should he add a focused fund? So you have just recommended that in place of the small cap. He says he doesn't have any pure large cap or a mid cap fund. He has concentrated mostly on multi cap funds. So is that something that he should add, which is either a large cap or a mid cap or both? And secondly, he wants to know that Mirae and Axis have both launched new funds in this focused multi-cap category, etc. The funds are new, but fund managers are old. So is there anything in that space to consider?
See, now that we discussed the focused, I would say SBI focused, the same fund manager, R. Srinivasan, has been managing it for 10.5 years, from 2009. And I think those 23 stock portfolio is very well formulated already. So I would not go for new funds because I don't know what the composition is, what the behavioral pattern is. Of course, the fund manager is not new, but the fund is new. So unless I was left with no choice is when I would go to a new fund in the focused category, where there's a very, very good fund. In fact, there's another focused fund as well on the ICICI basket, Mrinal manages. When these two good fund managers have been managing these funds for long periods of time, I would stick to those and let the data emerge for the new ones over the next few years to contemplate an entry into those.
All right, meanwhile, there is some news coming in at the bottom of your screen. Former Maruti MD Jagdish Khattar has been booked for 110 crore rupee bank fraud. CBI has booked him for cheating Punjab National Bank for about 110 odd crores. So the Punjab National Bank is the one that should be in focus. Maruti, yes, it has seen a bit of a slip, but no relation so far between the company and the person, apart from the fact that he's a former Maruti MD. So PNB is the one, if at all there has to be any stock related reaction. Maruti, not too sure whether there is any connection between these two. This looks like it is in his personal capacity. He was a former Maruti MD, but that is where perhaps, the connection between Maruti stock and the person in concern, a person in question is concerned. So that's pretty much about it.
He's also a former IAS officer.
Also a former IAS officer, okay.
Yeah.
So,
okay. Mangalam said that the similarity ends as far as the fact that he has worked previously at Maruti. Okay, but more
we
queries?
have another query. What am I saying? We have Ijaz T. He calls us from Mumbai. Ijaz, good afternoon. Tell us.
Hey, hi, good afternoon. Hope you are doing well.
We're doing well. How are you?
Yeah, I'm doing good. Thank you.
All right. So you have a handful of funds or investments in multiple funds. Tell us what your query is.
Yes, I have a few queries, so I'll just discuss one by one. I have started investing since October 2018 in following funds, which are Access Blue Chip Fund, Standard Multi-Cap, Dairy Asset Emerging Blue Chip, L&T Mid Cap, HDFC Small Cap, DSP Tax Saver Fund, and Access Banking and PSU Debt Fund for my emergency fund. So my first query is, how are my fund selection, and is there any changes need to be done? The second question would be, for emergency corpus, is it fine to invest in banking and PSU debt fund? And the third query would be for tax saving fund, for DSP tax saving fund. If my SIP has completed 3 years, can I withdraw the SIP amount and again reinvest in the DSP tax saver fund? And the additional amount which is there, which I was supposed to invest.
Ijaz, we'll come to your last query in just a bit. First, we'll handle the first two queries that you have. The first one, of course, is his selection of funds. He's 32 years old. His goal is long-term wealth creation. The second is it fine to invest in a banking and PSU debt fund for emergency purposes?
See, I think Mangalam, Ijaz has started investing just about a year back. I don't think you need so many funds, point one.
Right.
Always this process of investing is a learning curve. Start with the conventional ones, the large cap, the mid cap and the multi cap. Of course, there are some funds which need change, in my opinion, especially the tax saver fund, the DSP tax saver fund. I would live without it. I would stick to maybe a Access long term or a Reliance Nippon tax saver, which is what it's called now. Don't stick to DSP. I would stick to larger fund houses when it comes to monies which you're locking in for 3 long years. So you want stability as much as possible. And I think those larger AMCs provide you fund management stability. So that's point one. Make some changes. Access Blue Chip can be something which you can stop your SIP in now that you've made 12 installments or 13 installments of that investment. You can look at Mirai Large Cap, which is a very good large cap, and a Nippon Large Cap. Could be a good fund replacement in the large cap space. So I think these minute changes. Now coming to the last bit which you were just asking, Ijaz, if you exit all the money you've invested in the ELSS scheme, which is the tax saver scheme, and exit and re-enter, you again get the tax break, provided you finished your 3 years. So you can use and recycle the same money to get a tax break again. And subtract or add depending on what the current financial year's tax status with respect to your file is concerned.
Okay, let's take a quick break on that note. As we do that, here's a look at the top stories on Money Control Pro today. Has the coal sector reached an inflection point?